Okay, we're going to begin with the last session for today. Shipping finance and investment in 2021 and beyond. Can I invite the panel to the stage, please? So the panel that will follow consists of a strong and diversified mix of ship owner CFOs and leading Asian credit providers who will discuss today's market conditions and their visions for shipping finance going forward. I'm very pleased to welcome Mr. Ali Susanto, Managing Director at Braemar Naves Corporate Finance. Mr. Susanto will be moderating the discussion. Mr. Susanto, please. Thank you very much.
Good afternoon. It is refreshing to be in this physical conference again after missing the conference for 1 year plus. Today I'm joined by 4 distinguished panelists. I welcome all of you, and maybe Jolene will start with introducing yourself.
Hi, sure. Good afternoon, everybody. Jolene Chu. I'm from Clifford Capital, co-head of origination and structuring for offshore marine and shipping. Pretty much in charge of looking at new transactions for Singapore companies looking to expand overseas, as well as exporting their goods overseas. So we were formed. Clifford Capital was formed in 2012 with the mandate of the Singapore government to support Singapore companies overseas.
Klaus?
Yeah. Hello. Yes. Thank you very much. My name is Klaus Schmidberger. I am with KfW IPEX Bank from Germany, Frankfurt. KfW IPEX Bank, I think, is a long-standing shipping bank. We started decades ago, especially supporting German exports. As part of the KfW group, we have a political mandate to support European industries on their international stage. As in shipping, we do this in Singapore, of course, covering Asia Pacific. My main responsibility is business development, support of the origination, and coverage of our clients in Asia Pacific.
Jutta, please.
Good afternoon, everyone. My name is Uta Urbaniak-Sage. I'm the CFO of BW Epic Kosan. I've been with the company now for 13 years. Before I joined BW Epic Kosan, I worked for HSH Nordbank in Hamburg and in Hong Kong.
Thank you. Marcus?
Hi, good afternoon. My name is Marcus Wenke. I'm the CFO of FSL Trust Management, the trustee manager of First Ship Lease Trust, the Singapore exchange-listed business trust. Previously, I was a banker until last year, ship finance banker, with HSH Nordbank and later Hellenic Bank.
Thank you. I will start with this a bit of short story. Basically, around 2 months ago, a shareholder of one regional shipping company called me. This shipping company owns 15, 20 vessels, but they have been lying down in the past 2-3 years, mainly because of the bad market. And then because of COVID, they lost their CFO as well. And then starting this year, market start to improve, and then they bought 2 vessels. And then when she called me, she was a bit panicking. Basically, she said, "Hey, what's happening?" They said, "I called my ex-banker, Norwegian bank, and they said, sorry, we do not provide lending anymore. We can help you to raise financing, but that is all we can do." And then she called 3 German banks. One of them give the same excuse or reason. And the other 2, she said, not even picking up my phone. So she was basically panicking and said, what is happening in the industry? I think, blame that to Marine Money not arranging conference last year. So that is, yeah, you know, some of the, I think, shipping companies were not really engaged in the market has a bit of loss of information and contact. That basically brings us to the discussion today about shipping finance and investment in 2021 and beyond. My first question is indeed to Jolene first. Do you foresee the trend of banks pulling out of shipping and replacing by alternative financial continue in the near future? Why and why not?
That's 3 questions. I was listening very intently. Thank you. Thanks, Ali. I think that's a perennial question. I believe that since the GFC in 2009 onwards, we have seen a reduction in the number of players who are providing financing to shipping in general. And we have also seen at the same time the inclusion or the coming in of new players, either through direct finance, funds, PEs, etc., throughout. Having said that, you know, it's been a cycle, right? So we have seen quite a few of the household names who are, at first they said that, okay, we're not taking on new clients, we're hunkering down, we are consolidating our situation with our existing clients. And then over time, you know, as soon as the market recovered a little bit, they were okay. And then after that, when the markets crashed, then they started saying the same thing again. So this happened quite a few times, I have to say. And now what we see, the landscape that we see right now, compared to when I first joined my previous bank in 2008, I think the market, in terms of the number of players available, is extremely different. Clifford Capital, we didn't even exist in 2008. We started operations proper in only 2013. So long story short, I think that, you know, there will be the same, a few core banks who have always been there with their key clients, because in shipping it's all about relationship, right? So with the really long-term relationships, the large clients, the old shipping companies, who have been there, shown themselves to be very sustainable businesses and have evolved over the years and the decades, I truly believe that these companies will continue to enjoy the support from their existing banks. It might not be that they would be banked by the same shipping teams, for example. It could maybe be pushed into a general corporate department, for example. But, you know, these banks will still be there for their clients. At the same time, you have newer players who have come in. Again, for Clifford Capital, when we were set up, we decided that, okay, let's go into shipping simply because Singapore is a premier international maritime center. It is very clear what we want to do with Singapore as an IMC for short. And one of the things that have consistently been stated to be maybe we could have more of in Singapore is financing for shipping companies in Singapore. So what's our mandate? Our mandate, one of the key ones, is really to be there for Singapore companies, not necessarily Singaporean, but for a company which has substance in Singapore, who have set up shop here, taken that leap of faith to come into Singapore, and they say that, look, if we need financing, we're a good business, would you finance us? And it is for us to say, yes, we would love to support you. It's part of our mandate, subject to certain criteria and qualities.
Thank you.
Thank you.
Klaus?
Hello. Yes, you put it quite right that many of our peer banks, especially from Europe or Germany, have left the stage, have left shipping. That's unfortunate. So I think, looking back, I think this dynamic, I think, was partially has its cause or its source in the 2008 crisis, and then I think the portfolios back then were huge, and these has been carried on, and then I think the digestion of these portfolios at some point, took a long time, and during this period, I think, shareholders and stakeholders just took the decision, okay, there were too many volatilities, there's too much uncertainty, and there's better ways where we want to put our efforts. And I think, but this has been going on, I think, till recently. At the moment, I don't think this will go on that way. I think the digestion has been done. I think who is on stage now, I think will remain, as Jolene said. I think the core shipping banks are around, and they are willing to continuously support their clients, as they have shown, I think, over the last year during COVID. So I don't think in the short term we will see the similar dynamic in this field. However, on the midterm side, I think there will be other dynamics, other trends that might put this topic on the agenda again in the boardrooms of the banks and the shareholders in the bank or stakeholders. But the dynamic might maybe less be driven by the reasons we have seen before. I think it's rather than maybe driven by ESG or by bank regulatory reasons. Like ESG might maybe put more focus on certain aspects of shipping. Shipping is very diverse, we all know it. Yep. So there might be sectors or parts of shipping that might be more in favor of ESG policies of banks than others. So I think this could play a role going forward. And when it comes to capital regulation, Basel IV, is on hold at the moment. But history showed that these kind of regulations are seldom in favor of asset heavy industries that are volatile and so on. So I think they're more in favor of corporates. I think this has also been mentioned before here during the day, that the banks might then look for different or more corporate-like business models to continue, and this will also have an effect on this discussion on, okay, what are we going to do in transportation, in shipping. But that's the bank perspective. On the other side, you mentioned the alternative lenders or alternative sources of capital. I think, markets function that way. If there's a supply, normally, if there's a demand, a supply will follow. It might look different. These sources have different regulatories, they have different goals, they have different price expectations, but there should be a supply. It's just, I think, a matter of how to funnel. I think Joshua said that before, how to funnel this kind of capital towards the need, the demand, and maybe banks, or maybe, I'm sure banks can also play a part here in arranging, in providing their expertise, which they have gained over decades in this sector, in this markets, but collaboration might then lead to a good solution for the owners.
Okay, interesting, thank you. Yuta, sitting on the other side of the table and for your interaction with your lenders, potential lenders, what do you see the trend? With more banks pulling out, or currently we hit the bottom, or with more financial coming in? What do you think?
Yeah, I think I see quite similar things. Klaus just mentioned. In the last few years, we have seen increasing regulation for European banks, and that has affected their strategy to reduce portfolio or to exit shipping entirely. And we don't have to look too far away. If we just look at Singapore, quite a number of European banks here have closed their offices or about to close the branch. And on the other hand, this also creates opportunities for the local Singaporean banks to fill the gap and to step in. We have seen Chinese leasing houses showing remarkable growth, and we also saw Japanese banks increasing lending to international clients. So I agree, capital is there. It's just the question which company has access to which part of the pie.
Okay, thank you. Marcus?
I fully agree with what has been said so far, and I think from a ship owner's perspective, it's very important to think about what the appetite from the owner's perspective is to tap the right pockets. But the pockets are there, and I, as an ex-bank, I would rather say that the trend over the last 10, 12 years has been a diversification of the lending side. And there's basically money available for every transaction I can think about, just priced differently. And obviously when a ship owner wants to have 80% financing for a vessel that's operating spot, there are fewer pockets to tap than if there's a transaction with a 50% and long-term employment or 60% and long-term employment. So I don't see it necessarily bad or negative that there has been a change in the landscape of ship finance, but it's also an opportunity, and it's pricing risks more appropriate, say it this way.
Okay, thank you. Now we focus more on the lending side first, Jolene and Klaus. The COVID-19 actually, I think, has some silver lining as well, in the sense that you see also last year, tanker market was performing quite well, at least in the second quarter. And after that, a container market we see is booming now, and dry bulk market is doing relatively well. And if you see, actually Moody's basically named shipping, although they did not really specify which sector is one of the best performing sector in 2020 and expected to continue this year. So from the lender's point of view, how does this COVID-19 influence your decision in lending? Would it make you more conservative, or would your banks allocate more resources, I would say, to this sector or not? Or it indifferent? Jolene?
Thank you. Yeah, so I think COVID-19, what's clear is that ESG concerns have been brought to the fore. So it's maybe I just speak for ourselves or myself. We have given a lot more thought, put a lot more time and effort into thinking how we want to shape our ESG investment thesis. We are a lot more discerning now on the potential transactions that we would like to go into. Is there a sustainability angle that we could finance and be part of? Because ultimately, as a company, as a financier, we truly and strongly believe that energy transition is here to stay, and I think that is a fact that is unassailable in these days and time. And we would like to play a big role or strong role in this energy transition. So I would say that in terms of capacity or resources to deploy into ship finance, I wouldn't say that has changed at all. It's really helped us to focus our thoughts into certain buckets and saying, okay, what are we going to focus on? Instead of just previously where, okay, what's the price, what's the LTV, what's the market like, etc. So a lot more thought on the sponsors, the operations, the companies, and whether these are good counterparties that we should be banking with.
Okay. Klaus, your thought?
Yeah, I think my answer is very much in line here. I mean, KfW IPEX, I think we are one of the largest cruise financiers worldwide. So I think we had a quite different experience on our cruise portfolio minus on our commercial shipping portfolio. Cruise, I think it was really serious, but I think together with our partner banks, with our clients and the ECAs, we were leading the process to stabilize it by providing a foundation for saving liquidity and so on. So this exercise was quite a lot of work and effort, but I think it paid out, and now they're in stable waters. On the commercial side, COVID year was at the end quite well. We committed 1.4 billion in commercial shipping, and this was mostly on, as we found out that our current clients, it was mostly with existing clients, because shipping is a people's business, a relationship business. So if you cannot travel, if you cannot meet, if you cannot interact and exchange directly, you are bound to your desk. It's hard to make new relationships, but you can still continue the existing ones, and that's where the investments into the relationships over the last few years paid off. And so we managed to close the year quite well on commercial shipping, and it turned out that shipping, being a crucial infrastructure to the world economy and global supply chain, showed quite a resilience during this pandemic and this crisis. And I think that's what we're going to focus on going forward. Resilient business models. What does it take to be resilient again in these uncertain times? I think Andreas and Paul said it before. We don't know what's coming. So now our focus is much more on how can the corporates, our customers, manage in these uncertainties? And maybe the last thought is that it's very much more, I think, the trend we see is much more into corporate-sized lending rather than just the asset.
Okay, thank you. My next question would be still on the financial side. How also do you consider where we are in the cycle of certain sector? For example, let's say if I compare offshore and container shipping, for example, container shipping currently is doing very well, charter rate is good, of course vessel price is expensive, or offshore more or less in the bottom. I do agree with you that there are financial for each segment basically. But for me, it's also sometimes very surprised as well. For example, we have a mandate for an offshore company. They are offshore support vessels, but this company own like also around 15, 20 vessels. But in the past 5 years, they have been making money. And they are basically net cash. Their cash on hand is more than their debt. So never book loss in the past 5 years during difficult market. And they want to raise some money. So we help them to speak to the banks, but my feeling is the banks is more afraid of word offshore than COVID-19 probably. Most of them, without seeing any explanation, already say no. So in that kind of cycle of situation, what do you think, what we Clifford Capital do, for example, still no to offshore, or would you consider for selective client? How about KfW?
I'll take this first. Okay, so what I had neglected to mention at the beginning when I introduced Clifford Capital was that, when we were set up, we only look at 3 pillars. We finance infrastructure projects, we finance offshore projects, and I would dare say offshore energy projects, as well as shipping. Okay. So it is one of the core pillars of our business model. And that there is a genesis to that, but ultimately, we would not walk away from a potential transaction just because it's offshore. We've got to, however, what I'm also saying is that there are many other factors that we now have to look at before we would be able to say, look, this is a project that I could potentially look at, simply because, is it a fossil fuel project? Is it an exploration project? Is it a production project? It really depends very much on where this needle lands. We need to look at, as well, if it's a pure offshore project company, we would also see, okay, what is this company trying to do in the transition? It is very difficult to say that if I've got a pure play drilling company, does it mean that I don't touch drilling? Because if it's a very good client of ours, it has always done very well, we need to think about the reasons for why we would want to continue supporting or not. For an OSV vessel company, same considerations. Where does it lie in the offshore value chain, etc. So, long story short, we will not say no. However, it's definitely not as easy as one would imagine, and I'm quite sure that everyone agrees with me there.
Okay, thank you. Klaus?
Yeah, it's a tricky question. Okay, maybe one general thought is like, whenever we look at a project, no matter what sector, what asset, or what company, I think the basic question as a banker you have to ask yourself, and you have to get an answer is, okay, who and how is going to be my loan be repaid? Like, where do the cash flows come from to repay my loan? And normally we would look into, okay, is there a corporate, is there a project, is there an employment that will generate the cash flows to a certainty that we are comfortable with. So, and if these two main questions or sources are one of those are given, then we can look into, okay, what are the terms we want to offer. But if you say, yeah, offshore client with his PSV fleet makes some money, but okay, but this is a short-term, like this is a momentum, that's a picture, okay, this is at the moment. So how sustainable are these cash flows? Can we lend on this for a long term? Like if he's asking for a 10-year loan, but he has a spot market or project-based business model, I guess it will be difficult to get this 10-year loan. So it has to match. So at the end of the day, it's a case-by-case decision, and we cannot rule out anything. That's what I would say. But as Julie also said, offshore sector is definitely challenging, and at the moment, container is booming. So you have much better chances to get a project through on a container deal.
Okay, understand. Thank you. Now going to the ship owning side, Jutta, can you tell us a bit where you are now in terms of your planned investment? Do you think it's now a good time to invest? And what are basically your key considerations in deciding whether to invest or not?
Well, I think making investment decisions in shipping is not an easy task. You commit a huge amount of capital for 25 to 30 years, and you run your numbers, you make your analysis, and then something unforeseen happens, and everything looks different, and the return suddenly changes the return on your investment. So it's not easy. Is it a good time now to invest? Well, starting with new buildings, the order book in our sector, the small pressurized LPG sector, is quite small. It's 5% over the next 3 years. The demand side looks fine. Seaborne LPG trade is expected to grow by over 3% this year. So looking at these facts, it seems that we are at a good point in the cycle. But then, of course, there are a lot of unknown things. How does the future ship look like? Is it run on LNG or is it run on hydrogen, etc.? So I think ordering ships today is quite a big bet, and we think consolidating existing fleets and existing ships makes more sense for us. We have just recently closed a transaction with Lauritsen Kosan, where we bought 34 ships from them. So that's not adding tonnage to the market. We don't need more ships at the moment. So we think consolidating is a better option for us. We don't grow just for the sake of growing. Every decision has to make business sense, and a lot of factors play a role here. So it's a combination of different factors whether to invest or not. Okay,
understand. Thank you. Marcus, where is FSL now?
I can only echo what Uta said. I would, however, say it slightly different. One from the angle of the market risk and one from the angle of the regulatory risk. From the market risk, I would say it depends on the specific segment, and even within the segment, the specific vessel sizes. Overall, though, I would say that the asset prices are fairly high across the three main segments. And the question there obviously is, how long will in container shipping the boom last? I mean, there are some black swan events that have certainly helped to push rates up. But those black swan events have become more and more over the last, I would say, decade. And also the cycles have become shorter, which makes it more difficult to make an investment decision. And then it has been discussed at length at the conference today. The environmental regulation plays a huge role, where there's a lot of uncertainty where we are heading into, which will probably affect residual values and economic lifetimes of vessels. So the investment decisions are not easy. I agree with Uta in relation to to new builds, I wouldn't order a new build without having long-term coverage today, simply because the risk would be too high, and taking such a huge amount of money in their hand and spending that on a new build where we don't know what the future energy source for shipping will be is a bold bet.
Okay, thank you. Before we continue this discussion, maybe we open to the floor if you have any questions. Yes, please.
Yeah, my name is Gear from National Australia Bank. Question for the owners. Are you concerned about financing older ships in the future? And do you think the structure of financing needs or will have to change? And I guess where I'm coming from, I mean, hearing here today and reading any press article, it's all about modern ships and new technology and less emission, of course. And that's all well and good, but I think the world still needs some other ships. And with Poseidon and other things coming in from the banking side, that might prove challenging. Structuring-wise, why I'm asking that question is more on the presumably, or maybe, financing those ships will be slightly more expensive in a charter market where they might earn less than a new ship. So the question is, yeah, so are you concerned about financing all the ships in the future, and do you think the structure will need to change?
Okay, I start. Well, I think older ships don't exit, the market immediately. They will be there for a while, and it's even a question whether, from an environmental perspective, is it better to order more new buildings, or whether it's better to run these older ships until they reach their, 25 years or 30 years in case of LPG. So I think these older ships still have their place, and whether, banks have still appetite for it has to be seen. It might be reflected in a different, risk profile pricing, but I don't think it will be impossible to finance these ships because they are still there.
Yeah, I agree to that. Actually, as FSL, we are currently in the process of financing up to 17 years old vessels. And as I mentioned before, there are pockets basically for every kind of transaction you want to finance. It's slightly more expensive, but to give you an example, for the up to 17 years old vessels, we have charter coverage, so it was, I would say, rather easy to raise finance despite the age. Obviously, from an owner's perspective, we always need to ask ourselves for every kind of financing, investment, divestment decision, whether keeping old vessels is accretive to our business, and if the financing is, or the cost of financing is prohibitive, we would rather sell. It's an easy decision.
Thank you. Any other questions?
So, okay, I have one question too.
Thank you so much. I just have a question for the banks. The Chinese leasing companies are booming and presently supporting the industry internationally. How did you see this trend affecting your business here, especially in Singapore and in Europe?
Thank you very much for this question. Yeah, we have been asked this quite a few times over the last few years, I have to admit. And yeah, our position towards Chinese lease or alternative financing companies, but Chinese lease is definitely the largest, like from volume-wise, is that we see them both. Like, of course, they provide competition, but at the same time, they are partners. We do refinancing for these kind of leasing houses on a selective basis. Of course, we need to have our European angle. And but at the end of the day, they provide, in my view, in refinancing them, they provide another layer of risk mitigant. So you're lending towards the leasing house, and then there's the shipping part is actually linked to the whole transaction via the charter contract. And we can also access shipping risks or risks that we, or like additional risks we don't normally finance directly in shipping. For example, like if the tankers are them chartered to oil majors, for example. So we have this kind of diversification effect on our portfolio, which we appreciate. Of course, the pricing is very competitive, and that's why we are very selective on it. And of course, we also have to keep in mind that we are financing the ship owners directly, so it has to be balanced. And so, yeah. But overall, I would say it's a good cooperation, and it's providing more positive towards the landscape.
I can say a few words about this. I think in terms of the various sectors, we're seeing the Chinese leasing structures previously, probably like 1 to 2 years back, we saw them to be more active on the offshore front, on the production projects. For those projects, the capex involved was much larger than what we see in shipping. So from that perspective, it's not quite a competition as we would see it, because the more capacity for financing, the better for the project. On the shipping side, we haven't really come across projects where we would have had to either finance into a Chinese leasing structure, because we are primarily, from our mandate, we are supposed to be financing and supporting Singapore companies. And they need to have that substance, real substance of a company with operations, etc., based out of Singapore. So from that perspective, it kind of eliminates the need to come across any Chinese leasing structures, actually.
Just a small additional also. From what we see also, the Chinese leasing company in the past 1 year, 1.5 years, I would say they become a bit more selective as well. Of course, on a very good name, they will still very competitive and can be very aggressive. But in general, the terms has basically been more conservative. So they are basically now, on average, shipping company, I would say they will just quote you 65, 75% loan to value, that kind of things. Gone are the day where they will, first term seat, they will get 85, 90%. Directly. Of course, for a very good name, you can still get 95 or 100% financing. Any other question?
So, as you know, we've been live streaming this event, and some of our audience listening to the conference and watching the conference online have submitted questions. And one of the questions was direct to the two ship owners on the panel, Uta and Marcus. The question is, what do you think of the Poseidon principles? And do you think that there's a difference, or is there a difference dealing with banks that have signed up to the principles versus others who haven't?
We are fully committed to Poseidon principles. The last financings we put in place the loan agreements included Poseidon principles, so we follow those. As a company, we are very committed to reduce emissions, to create a sustainable shipping industry. And therefore, going forward, I hope that we see more and more emission-related KPIs for shipping companies, because that's where we can play our part and where we can be active.
Yeah, I agree with that. I mean, it's lenders are one of the key stakeholders in shipping, so I think it's important that they play their role in decarbonizing the industry. So I think the Poseidon principles are a very good initiative, and obviously it was mentioned earlier during the conference. Quite a significant market share of the overall lending market is already participating, so there's no way around it, period.
Thank you. Any other question, Andrew? No, we go this side of the room. Yes, please.
Thank you. I have a question for Ms. Jolene Chu at Clifford Capital. I understand that you mentioned that one of your core fund is infrastructure fund. But recently, we're receiving there's some infrastructure fund requests, but mainly from developing country. But we understand there's some fund got some internal regulation. The fund only can be applied to developed country, not like developing country. Do you have any internal regulation about that?
Well, I have to say that the infrastructure investing side is really the other side of another team who's dealing with it. But what I can say is that from a mandate perspective, it is similar to what we have on the shipping and offshore side, which is that we have to follow the Singapore companies who are investing in infrastructure projects outside Singapore. It is really a very developmental financing kind of role that we're looking at, simply because when we were set up, we had identified a gap in financing capacity for such projects, and we found that Singapore developers who were looking to expand overseas were having difficulties getting financings, either getting their home banks in Singapore to follow them overseas to certain jurisdictions, or they were finding it difficult to get financing from the local banks in the jurisdictions that they were looking to invest in. Does that answer your question? Thank you.
Any more question? No? Yeah, I see the timing, we only have a few minutes left anyway. Yeah, so maybe we do one round up, closing statement, or yeah, basically your wish list from the shipping finance point of view. What you want to see to happen, for example, this year or in the near future. Yeah, maybe I will start. For me, yeah, I would hope that yeah, financial will be more responsible, which we see now as well. I think be more selective of the ship owner, that is also good, be more committed to the environment, and yeah, conservative ship owner. Yeah, I do hope that because of this COVID situation and the proof that shipping is basically resilient to the current situation or downturn, depending of course on the sector, that there would be more financier or investor coming to the sector. Yeah, that is basically my thought. Jolene?
Okay, thank you. From our perspective, we are very excited. As I mentioned earlier, we are looking to play a role in financing the energy transition, whether be it through vessels or the infrastructure that could necessarily be needed for shipping companies to make this transition. Ultimately, according to our mandate, we want to be an enabler, a catalyst to bring Singapore companies out in the sector. So yeah, we're very excited to see what we can do in that space.
Maybe from my point, a rather personal wish is that I think it has been said earlier today that I think here in Singapore we are very fortunate and privileged to have meetings like this, to go out every day and to have a quite normal life. And I think the wish should be going forward that this will be happening soon all over the world, with my family being in Germany and my friends, but even more I think in other parts of the world that are less fortunate. So this is my personal wish, and for business I think we want to support our clients going forward as we did in the past. We are open to facilitate, to support, especially the green story, the ESG story, not only E, SNG will follow, I think, rather sooner than later. New buildings, retrofits, please approach us. We are there for you.
Thank you. Yuta?
Yeah, we are fortunate to still have a lot of support from our key relationship banks. So I'd like to thank all the banks here in the room and abroad very much for the support over the last years. For us, it's very important to have these long-term relationships, long-term partners who understand our market and our business and our needs. So it's important to keep that relationship. And the traditional financing market is still where we would go first if we have any financing needs.
Thank you. Marcus?
wish for ship finance would be that the new generation of lenders and alternative capital providers are not repeating the mistakes that were made before the Lehman collapse, because that would mean that those banks or lenders are out of the market rather soon again, and that wouldn't be healthy for any of the market participants. And in general, for shipping, I think we are just at the beginning of one of the most interesting and transformational periods for shipping. It's going to be a bumpy way. It's going to be challenging for many. Obviously, as a small ship owner, we don't have the resources to trial and error as larger owners have it. But I think with smart ideas, people will be able to generate a lot of value.
Thank you. Thank you, Marine Money, and also Andrew for arranging this overdue conference. Thank you.
Thank you, Ali. Thank you to the panel. So that brings us to the end of our conference today. I hope that everyone in the room has enjoyed being here, and to all those tuning in online, that you enjoyed today's discussions and found the conference valuable, stimulating, and perhaps learned something new, or left with a better understanding on where we are and where we're heading. Just before I close, I would like to again thank Standard Chartered for their strong support as our partner sponsor today. Thank you, Abhishek, and the rest of the corporate sponsors, Transport Capital, Clifford Capital, as well as Braver Naves. And a reminder that our next conference in Singapore will be our flagship Marine Money Week Asia conference, scheduled to take place here at the St. Regis on the 14th of September. We hope that by then we can host a lot more than 50 delegates in person, and that flight restrictions will have eased, allowing people from around the world to visit Singapore in person and continue to build the vital relationships that our industry so heavily depends on. Once again, I'd like to thank the government as well, the businesses and the people of Singapore for making this first gathering in over a year possible. To all of you watching on the screen, I cannot adequately describe how happy and stimulating and dynamic it has been today to be with people. At Marine Money, we promise to do everything humanly possible to share that remarkable in-person experience with you again here in Singapore in September. We look forward to seeing you all there, and we wish you that you enjoyed the rest of Singapore Maritime Week. Thank you very much for being here, and thank you very much.